so yesterday we got that red hot number for inflation numbers for November, and definitely coming in line with expectations from a financial derivatives company. But let's bring in Mr. Bismarck Rouhani now. Tell us more about the numbers. Great to have you, Mr. Rouhani. Good morning. So inflation for November, that was in line with your expectation at 34.6%. I guess it's the same factors contributing to this red hot inflation number for November.
Good morning, Ladi, and thank you for having me this morning. The inflation numbers came out as expected, exactly consistent with our forecast, and it increased to 34.6. The most important thing to note here is that this is the third consecutive monthly increase, even though the increases are slowing, generally speaking, but it means that the whole idea that at the end of the year we will be seeing inflation tapering towards 30% is not going to materialize. What it does mean is that even for December, we are going to see a slight increase again. What drove this particular increase? One, petrol price increases. Two, the exchange rate weakness. Three, excess money supply in the system. And four, general cost of distribution across the value chain in the country. So generally speaking, we are in an inflationary environment, but the good news is that the rate of inflation increases and the rate of price increases is beginning to slow. But generally, when you look at core inflation increased, food inflation increased, and of course, headline inflation increased. But interestingly, monthly inflation actually declined. The monthly inflation is a much more accurate measure of the current situation because you are comparing the price of goods last month with this month, which gives you, which confirms to us and gives us the hope, and the hope that in January or February, January normally you see prices come down because of post-Christmas activity. So in January and February we begin to see moderation. I would not be surprised if we begin to see inflation taper down to around 33% or 32% by February. Why do I say this? Because it was in February last year that we had the lowest value of the naira in the foreign exchange market, 1,910 to a dollar. Today, the naira has appreciated, but they're also wobbling again to 1685. I think, right? It's let's see, the naira is actually down at 1680. So compared to this time last year when it was slightly weaker, and compared to February this year when it was 1,901, 1,910. So when you put all of these parameters and stocking factors together, it tells you that inflation is still a problem for Nigeria. However, it might begin to moderate. But on one caveat, one major reason is that there's been a lot of spending, fiscal spending, without a corresponding increase in productivity. We are seeing this in terms of the budget that is going to be announced tomorrow. The Federal Executive Council has approved the budget, and the President is going to table that budget before the National Assembly. The whole idea of trying to actually placate the suffering of the people by spending money, but the spending has to be efficient. That is our biggest fear. It could be inefficient spending, even though the nominal figures are high, but it could be inefficient spending, which means that there will be leakages in such a way that it might be counterproductive. But generally speaking, we think that based on all the projections, based on the price of oil, based on the structure of the foreign exchange market, we might begin to see some moderation in the inflation rate January, February in 2025.
All right, and talking about 2025 and the budget presentation, we were supposed to have that today, but that's been pushed till tomorrow. So, looking at the budget proposal so far, how are you seeing this impacting inflation in 2025? What kind of spending would help tame inflation and also give some strength to the naira?
Well, you see, what has happened is that, let us not preempt, because the President is going to present that budget tomorrow. at this point in time, whatever we say about the budget is speculative. But we can be guided by the medium-term expenditure framework. And in that document, I think we're seeing the inflation target of 15%. I do not think that we're going to get down to 15% inflation in the near term. Even if inflation begins to moderate, at the end of 2025, most analysts are of the opinion that it will be anything between 25 and 28%. That's a far way from 15%. So the budget could be aspirational, the budget could be ambitious, but the thing is that to be successful is to be realistic. I do not think that 15% inflation is going to be achieved. On the growth side, yes, the growth target, we hear the numbers, the growth target of anywhere between 3 or 4% is achievable. The exchange rate projections of 1,400, it looks more realistic than 800 at this time last year. So, but I don't want to delve into the budget until it is an official document, which we can discuss. But whatever I'm saying now is based on extractions and extrapolations from the medium-term expenditure framework.
Right, and looking at the inflation numbers now rising, that's the month before Christmas. That's for November. So this seems to be giving us direction, on what to expect this Christmas. But how resilient is the Nigerian consumer? How resilient do you think the Nigerian consumer will be this Christmas, and how are they going to navigate most of these high prices?
The Nigerian consumer is embattled, but the truth is that if you look at the price increases, the changes and adjustments that have been taking place, in the last 2-3 months, the price increases have not been the magnitude of the price increase and the magnitude of the changes have not been as dramatic as it was 6 months or 12 months ago, which means that you can see that the petrol price actually, which is a key variable, Dangote is announcing that it's a 960. The 8 man is saying that we want it at 900 because the crude price has come down. So if the price of petrol now is at 10.70 in the pump, the price of diesel is at 10.55. They've been relatively stable. The exchange rate has been hovering around anything between 1,700 and 1,625. So it's been relatively stable. So those are the things that factor or play in to the standard of living and the quality of life. But let us not deceive ourselves. Nigerians are sweltering, Nigerians are in difficulty, and this Christmas, unlike previous Christmas, this one is going to be a Christmas you do not want to remember. But hopefully, 2025 is going to be a better year. There'll be more things, there'll be better productivity, and so on. But one interesting thing, though, is that the price of cocoa has gone up to 11,821. It's a record high. A year ago, cocoa was selling at 2,000. The thing has gone up by almost 400%. Cocoa export earnings are now going to be as much as $2.7 billion and about 5% of our total export earnings. So that's a major development. So before we used to talk about oil and oil price, now we're having cocoa. And the cocoa proceeds are going to 4 or 5 states. We're talking about Oyo State, talking about Osun State, talking about Ekiti State, and Ondo State. That's where the cocoa is grown. So generally speaking, we should be seeing those people really having they'll be having the best Christmas, just like those in Ivory Coast and in Ghana. So that's some good news at this point in time. And again, export diversification into agriculture, which is a major employer of people, is significant. So I think that's one green shoot that we're seeing.
Right. So I guess the Grinch for Nigerians this Christmas is inflation and currency devaluation at this time. But we're halfway past December now, over halfway. No fuel queues, as you said. So do you see us setting a record this December? No fuel queues.
I didn't get the question again. Can you repeat?
Do you see us setting a record for this December with no fuel queues?
No. What I'm saying is that December, the rate of inflation is going to increase in December, but not significantly. 1, 2. The price of, you can see that the price of rice, the price of onions are up, but we have seen the price of beans drop, and we've seen the price of pepper come down. All of that because there's consumer resistance to higher prices. But having said that, compared to December last year, we think there'll be a marginal increase in inflation, but definitely this will not be a Christmas to cheer. But there's this thing about the rail transport and the free transport for all Nigerians. The unfortunate thing is that the rail points are very few, and the rail passengers are not that many. So maybe they will extend it. I think the president probably will extend it to road transport and air transport. But again, that doesn't address the fundamental issue that the cost of doing business, the cost of carrying these passengers will increase. After 3 weeks, they will come back to normal again, and the cost, the effect of devaluation, the effect of the price of petrol, the effect of the price of cooking gas, and the price of food will catch up with us. We have to do something about productivity in this country. These palliatives and temporary relief will not deal with the problem of productivity. It's all about output and productivity, and also minimizing the printing of money. In other words, the fiscal deficit. It's now projected to be about almost 4.5% of the GDP numbers. It could have been worse if subsidies were not reduced and the exchange rate were not aligned. But even then, at this rate, we still have to bring down the amount of fiscal deficit in the economy.
All right, Mr. Rwani, definitely. I'm hoping we get some kind of white Christmas at this point. Thank you so much. Always great having your perspective, Mr. Basic Rwani, CEO of Financial Derivatives Company. Thank you.
It's my pleasure. Thank you very much.
All right, we'll take a break now. When we come back, more conversations, this time sustainable energy. That's coming up next. Just stay with us.